Good afternoon, Robert Scribbler. It is September 21st, 2018. Thank you for joining me for another climate change and clean energy video blog. Now, for this segment, I am going to talk about why actions by financial agencies is so important for the future of the Earth system and our future as it relates to human-caused climate change. And in particular, I just want to note that one of the reasons why it has been traditionally so difficult to cut carbon emissions has been due to high finance's alignment with funding fossil fuel-based projects and a lack of availability for funding for clean energy projects or for projects that reduce carbon emissions. And it's one of the reasons why agencies like 350.org and other environmental agencies have been supporting a divestment movement to send a signal to global financiers that they need to change their tune. Otherwise, we're going to be getting into trouble really quick. And this graph provided by the Breakthrough Institute just provides a range of potential relative impacts for various degrees of warming above Holocene averages. And it's worth noting that we are presently in a dangerous range as we edge above the 1 degree Celsius warming level, but that if warming continues above the 1.5 degrees Celsius, the 2 degrees Celsius, or hits the 3 degrees Celsius range, then we will see severely escalating impacts. And we can already see instances such as Hurricanes Harvey, Florence, Maria, Mangkhut in the Pacific, Haiyan. Just in the instance of hurricanes, losses of sea ice, losses of glacial ice, ramping sea level rise, worsening droughts, worsening extreme rainfall events, and other impacts now are already becoming visible even in the present day and are hitting hard in the present day. So if you think the present day is rough when it comes to human-caused climate change, well, if you keep burning fossil fuels, it gets a lot more rough. So just to think about as I talk about these aspects of global finance, which may sound kind of academic and a little bit wonky, but they're very important. So earlier this week, I highlighted reports that were talking about a Japanese investment firm, Marubeni, making a commitment to divest from coal and invest more in renewables, which is an important part of this needed trend in global finance that I highlighted at the beginning of this video blog. But we have also had recent news now that ING is steering its investment portfolio, which is a $500 billion investment portfolio, toward the 2 degree or less goal for global warming outlined by the Paris Climate Summit. Now, it's worth noting that 2 degrees warming is still pretty rough, but it's not as bad as if institutions continue to fund, say, for example, new coal plants or new gas plants, or fail to fund clean energy systems like wind and solar, or clean energy vehicles like electric vehicles. So this movement by ING is just another example of a positive step, but something that needs to happen across the world to generally disincentivize and move investment away from fossil fuels and toward clean energy projects. So I'm just going to dig down into the ING announcement a little bit more. This article provided by Energy Mix, and I'm just going to read the final paragraph of the article here. So the partners' science-based approach could have a significant impact, enabling banks to direct their money toward financing technologies that support a low-carbon future instead of those that only measure a carbon-rich past. This is according to the ING press release. The model that ING is planning to use concentrates on the technology changes that companies in those sectors need to make in order to be aligned with the climate goals of the Paris Agreement. For example, it is not enough for automotive companies to lower emissions by producing fewer petrol-powered cars. They have to manufacture more electric cars as well. And so what this is indicating or signaling is that ING is going to be aiming at moving its money toward influencing major constituents like automakers and energy companies to decarbonize their business, to adopt technologies that are low carbon or that are zero carbon emitting. And to this point, ING is aligning itself with a methodology that's provided by a research firm called 2 Degrees, which is providing an analysis for corporate lending portfolios on how to reduce the carbon impact of investment. And so the 2 Degree Investing Initiative provides basically analysis and a software that basically takes a look at the impact of investing on future carbon emissions and tries to funnel money toward climate change solutions-based technologies. And I'd just like to add that there's probably multiple reasons why banks are doing this. And one reason is that there is increased risk now to holders of fossil fuel assets and high carbon assets as it becomes more and more obvious that fossil fuel special interests have done everything that they can to try and cover up and try and confuse the public on the issue of impacts related to human-caused climate change. This most recent article from The Guardian noting that Shell and Exxon's secret 1980s climate warnings were covered up, and we have another trove of documents that show how much Exxon and Shell knew about climate change in the 80s, and by implication how much they have failed to serve the public, and how much harm they are causing and have caused by attempting to halt a response to human-caused climate change by transitioning to clean energy. So it's worth noting that investment firms like ING will be looking at risk, in particular their risk of exposure to liability and negative public opinion based on where they send their money. So a bit of a fire under the feet of these investment firms, a response that is certainly earned, and a response that is certainly necessary for us as a human civilization moving forward. So some good news on the financial front as it relates to climate change and clean energy. Let's hope that this trend of divestment from fossil fuels and movement of investment funds towards clean energy portfolios and toward carbon emission reduction types of portfolios continues. Thank you for joining me, and I'll be chatting with you soon.